Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Oliver Crook. We're an hour away from the opening trade. Here's what you need to know. The time has come. Fed Chair Jay Powell signaling a rate cut is coming next month, but questions remain around the size and frequency of this easing cycle. Meanwhile, right here in Europe, ECB Chief Economist Philip Lane says the battle to return inflation to 2% is not yet won, vouching for rates in Europe to remain restrictive for the time being. And French President Emmanuel Macron is due to meet with political parties and delegations in an effort to choose a new prime minister now the Olympics have concluded and France remains with a hung parliament.
Thanks very much, Kriti. The countdown to the opening trade starts right now. We're looking at the futures market this morning, down a little bit, 0.2% on the Euro STOXX 50 after some of that exuberance we got on Friday priced in at the end of the session from Jay Powell. Gold is also being touched down a little bit, but still close to that all-time high at 25.31. Brent up by about half of 1 percentage point, despite what we saw as a major escalation in southern Lebanon. And then the euro dollar, a huge week for European CPI. The countdown for the opening trade starts right now.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Monday the 26th, good morning, welcome to the show. Powell committing at the Federal Reserve to rate cuts. How big, I think, is a big question. When, I think, is the question that has already been decided. Is the data going to play ball this week? He referenced it. We've got some important data coming up in terms of the inflation data. What if it ticks higher this week? How does Powell deal with that? How does the FOMC deal with that? Remember as well, we've got the August payroll report coming up at the beginning of September. What happens if we see a bounce back in that data as well? Powell has committed, Kriti, the Fed to cutting rates. Yeah. But everything else appears to be on the table.
He's committed to September for cutting rates. We don't know what comes after that. And I think that's really the question here is what kind of pace is set? Is it a cut, pause, cut? Is it a cut, wait for a little bit? Is it a cut hike if we start to see the data support that? Ollie, there's a lot going on when it comes to this and no real clarity.
Just a moment. Ollie Crook is the other headline. Joining us around the table this morning.
The lead,
Yeah, precisely. This is the lead. Ollie is here from Berlin. He's going to join us all week. It's going to be fantastic. Comes on an interesting week as well with German data. We're going to get the EFO a little bit later on. We'll talk about that in a moment. Your take on Powell, though?
Yeah, I mean, listen, I think it's very interesting, and I think we can reflect a lot of what happened with the ECB, because we already got that cut over from the ECB, but the conversation immediately after that is what does the path look like? And you had a lot of different views over the ECB of what that actually looked like. Now it's sort of coalescing now for us here at around September, but that's still sort of an open question. So I think the Fed is on a much more sort of consequential trajectory, obviously because a lot more of the world and the markets care about that, but it's a similar dynamic of what we're having here in Europe.
Yeah, Europe. You do wonder whether the ECB went earlier, and I do wonder whether there's a danger that maybe Powell is committing the Fed to pulling the trigger early as well. Most economists I've read over the weekend seem to believe that the Fed is on the right track, that it is the right call to cut rates. But you come back and you look at the labour market data, which all of this seems to be prefaced upon. Yes, inflation has come down, but seems to be stabilising. Torsten Slock, though, and I kind of see what he's seeing in the data right now. You look at warn notices, they are trending lower. You look at the claims data, it is stabilising. You look at layoffs, they're at historic lows. Is this a labour market that really signals that the US economy needs rate cuts right now?
I think the concern, though, is that this is almost functioning. We talk a lot about normalization, but a little bit of as an insurance cut as well. We had a guest last week that was saying you have to watch the layoffs data, not the payrolls data, because that's where you could see the slowdown, specifically out of some of the corporates. And it's not an unsimilar situation to what you're seeing right here in Europe, Ollie. Yeah,
and listen, this is a very big week for European data. You know, we got EFO today out of Germany, not expecting anything good out of them. You know, we got a GDP final reading on Germany tomorrow. Again, a quarter of contraction in Germany. But what we'll really be watching for is the Eurozone inflation figure that comes out on Friday. 2.2%. Is that good enough? I think it probably is. The question is there anything that could go either to the upside or to the downside that could change the conversation around the ECB by the end of this week? So do you think it could go to 50?
Philip Lane, maybe. Philip Lane, there's lots of momentum in the European economy. Sorry, Philip, you're a great economist, but I wonder where I'm seeing that momentum right now. The second thing is he's saying that he's not convinced that the inflation genie is back in the bottle. And and I wonder whether this week we get clarification maybe that it's not.
Absolutely, and I think that maybe the Eurozone data is super important. Yes, we know that, but what is also very important to me is that we're going to hear for the first time from Nagel and Schnabel at the end of this week after the Hawks, after those prints, and I think that will be massively consequential.
I think the other piece of this, which maybe isn't being talked about the ECB as much as I think they probably should be, is what's going on with the fiscal deficits, because we're talking about right now and the data. This
is making up for that, though.
I am. I'm helping the ECB out. Maybe they're tuning in. But I think the reason this is so important is because in September, you actually brought this up. Not only do we have the politics of France coming back, we'll get to that in a moment. We have budgets coming out of Spain, out of Italy. Of course, it's going to be a conversation here in the UK as well, separate from the ECB. But this idea that you're starting to have these budget negotiations and these budget conversations, and as governments tweak their fiscal policy to kind of step back in line, does that affect the fiscal spend that affects the inflation numbers?
I'm very happy to believe that you think they're going to step back in line. There's no evidence out of Europe that any of these governments are going to step. They're not going to step back in line.
But the EU Commission has said that this is the year that they're going to start, taking this a little bit more seriously.
Okay. I hear what you're saying.
Skepticism here.
There's been a lot of talk coming out of the European Commission that governments need to step back in line and obey the rules, but there's very little evidence that governments actually are going to do anything that looks vaguely similar to that. Yeah, I have a healthy dose of skepticism. Let's talk about France. So the talks continue today. Le Pen and Bardella, I think, are in today.
Yeah.
They weren't in on Friday. The expectation is they're not going to be part of any next French government, so it's going to lean left rather than it's going to lean right. I think the takeaway from Friday is that Lucie Castet is not going to be the next French Prime Minister.
Yeah.
Cazeneuve seems to be the name that's floating around in terms of kind of a centre-left candidate to fill the role at the Matignon. So we'll see who is the next person who's going to get there. But it does look as if basically Macron is saying that Lucie Castet from the LFI it probably wouldn't survive a motion to censure, i.e. a motion of no confidence.
Yeah. I think the read-through out of this is regardless of who takes that role, France's deficit, dare I say, is still in tatters. We still don't know what changes are actually going to be made. But what does the market reaction actually come off of this? Are we still sticking to these spreads that hit up to, I think I've heard 90 basis points on the top end of the guidance? Is it still a market freakout, or is this a status quo and therefore a positive?
But also the logic for rejecting the candidate on Friday is that they would be susceptible to a no confidence vote. My question is, who under this construction of the German government is not susceptible to a no, French, right, the bias is clear, is not susceptible. And the second point, I think, which is a broader one, because I was looking at the sort of growth figures within France and trying to compare them to Germany, the French economy is basically the exact same size it was in 2008. So even with a government of Macron, the reforming government, has anything really going to change materially for France?
Markets. I don't think they think that.
But to your point about what happens with spreads, the spreads widened out when we thought we were going to have a right-wing government.
Because of the deficit and the spending.
And the extreme left probably produces a similar spread.
Right.
If they can produce some sort of centre-left government, don't spreads tighten in that kind of scenario?
It hasn't really been talked about, I feel like, right? Like, because it's been thought of that it would be a left-leaning leader. And I don't think there was a thought that it would come back to the center.
Well, no, I think it's just a kind of degree. If you are extreme left, then to Ollie's point, then the deficit is going to be a massive problem. If you're extreme right, then deficit is going to be a problem.
Yeah.
Anywhere closer to the centre, the deficits become less of a problem, and therefore the spread tightens as both tail risks kind of slightly abate.
It's a good point. I don't have the answer to it. I also love that inflation and French inflation doesn't seem to be playing a role in any of those. It's really a fiscal story. But it is playing a role in some of the other pieces of data that we're watching throughout the week. And that's really where I want to go next. We're really laying out what this week looks like because, of course, we're coming off Jackson Hole. There's plenty of data over in the States as well. We've got the durable goods data on Monday. We have plenty of Fed speak as well. Raphael Bostic speaking throughout the week as well. PCE over on Friday. You look at the European side of things, though, you are going to get the ECB's not Nagel, Schnabel this week as well, right here in the UK. You got Catherine Mann. But I think, Guy, the highlight of this week is Nvidia.
Nvidia. Wednesday night after the close, Nvidia numbers. Expectations are still high.
Yeah. And
if you look at the TSMC numbers, you can understand why. Any slip here, though, the market is very susceptible to any kind of an issue. And there has been some talk that the latest chips are delayed. Do we get more evidence of that in these numbers.
Yeah, there's a lot of pent-up positivity. And again, when we look at the sort of positive catalyst within the sort of economy, within the sort of the markets, I mean, the question for you, I mean, do you think that the sort of the Jackson Hole is more consequential or Nvidia earnings this week in terms of market signals?
Well, the effect of Jackson Hole is kind of behind us. I think we had that effect largely on Friday. I think the data on Friday out of the US, UMich data, obviously the core PC data, we get sort of two core PCs this week, Thursday and Friday. The Friday one is the one you want to watch out for. I think will be important. But it does seem as if the week pivots around Nvidia.
It does. And the reason, the way you connect the two is because Nvidia plays into, obviously, the stock market. You're still looking at the downside protection, which is very, very cheap on it. No one's hedging to the downside. Still, even though we've had win over win, this is a blessing and curse of being an A-plus student, I think. But I also think the read-through into the macro is that it moves the stock market naturally, an entire sector of it, and that feeds into financial conditions. So I'm pretty sure Jay Powell is going to be staying up late and watching, or late for us, afternoon for him or post-market for him, and watching what those Nvidia earnings do to the stock market, specifically on Friday morning, or Thursday morning, sorry.
Yeah, and the market has learnt that stocks can go down, which is shocking to some, I appreciate.
Do you really want to open this debate at 7:10 in the morning?
Okay, maybe not. We'll come back later. Look, I think financial conditions are important. I think, weirdly, Nvidia, therefore, does have an impact. If you do see, if the stock market, if you paint a scenario, if you were to see an Nvidia wobble, stocks go down, financial conditions, therefore, there's a kind of wealth effect, financial conditions effect. Does that take us closer to 50 from Powell? Or does that keep us with 25?
And what about the other risks to the chip sector, right? I mean, you know, we had a sort of one-way trade on all the sort of chip stocks for a very long time. Some sort of skepticism breathed in by some of the issues. They're idiosyncratic to Intel, yes, but that is something that can happen, particularly when you have so much exuberance priced into these markets. Let's
talk about the guests we got on the show this morning to walk you through all of this. Remember, it is a holiday here in the UK, so just bear that in mind in terms of the volume story you're going to be seeing playing out in terms of the market open this morning. Forvis, Mazars, Chief Economist, George Lagarias is going to be joining us. Central banks, unsurprisingly, the central topic of that discussion. We're going to check in on the metals market. Look, we need to talk about gold near a record high, but we need to talk about the metal story more broadly. What is happening with iron ore? What's happening with copper? Marcus Garvey is going to join us. He's the head of commodity strategy at Macquarie. He's going to give us an insight into what is going to be happening there. And at the Open, Deutsche Bank's private bank, EMEA CIO Dirk Steffen is going to be joining us as well. How do the markets read what we saw Friday? What do we look forward for the rest of the week? We're going to set you up. We got it covered. Don't you worry. We got to figure out what this week is going to be looking like and what kind of things you need to be watching out for. What else you need to know this Monday morning? The new Boeing CEO, Kelly Ottberg, faces key questions over the future of the firm's Starliner program. This after NASA turned to SpaceX to bring back astronauts that are currently stuck on the International Space Station. NASA announcing the decision after weeks of testing and debate regarding Boeing's faulty spacecraft. The firm behind the messaging app Telegram has questioned the grounds for France's detention of its CEO, who was taken into custody in Paris, at a Paris airport, Le Bourget, over the weekend. The Russian-born billionaire Pavel Durov was detained on suspicion of failing to take steps to prevent criminal use of the app. This according to AFP. And Israel says that it has destroyed thousands of Hezbollah missile launchers over the weekend. This based on intelligence that the Lebanon-based militant group was planning imminent attacks on Israel. Both sides have, though, announced for the moment that their operations are over. Despite the heightened tensions, talks aimed at establishing a ceasefire in Gaza commenced as planned on Sunday. A little bit of a reaction in crude. The market now appears to be reasonably immune to what is happening in terms of this story. You do wonder whether it's kind of a slight mirage that the market can ignore this, and it kind of feels like one of those classic situations where the market ignores it until it can't. And it feels like we're in kind of that sort of territory at the moment because there wasn't much of a reaction in crude over the weekend.
There wasn't. There isn't even really much this morning. Higher by only 0.7%. And just for our international audience, when you talk about the traditional moves you see off the back of it, you're supposed to see a typically 3 or 4% move in oil off geopolitical risks. And then, of course, it goes into 5 or 6% when you talk about things like tariffs, et cetera. I think the connective tissue here is that one of the reasons oil was spiking was because it had to do with the Red Sea and it had to do with kind of the transport of oil, right? Now it looks like the conflict is moving a little bit more inland and therefore perhaps not directly affecting the supply as it would. another place that would change this is if this affects Iranian supply on the market, and that connective tissue isn't there yet.
The connection between Hezbollah and Iran is pretty strong.
True.
So is this part of that triangle?
Yeah.
I think that's what the market calculus is here. I.e., is this part of the Iranian attack that we should be thinking about, I think is the question. And does this push that Iranian attack further out? Does it change the dynamic of that attack in terms of the coordination maybe with Hezbollah and other proxies in the region?
I think it comes back to the sort of perennial question here, which is something that, we've been talking about for almost a year now that this conflict has been underway, and certainly is a question that is more present in my mind now, which is, are we closer to a ceasefire or an all-out war? And that, to me, is not at all clear.
Well, yeah, the target keeps changing, and we should mention in terms of that the attacks do continue on the Red Sea, just to be clear. And I should actually point out there is a burning oil tanker right now in the Red Sea. It's an EU tanker. And if you look at the U.S. State Department, they've come out and compared the amount of oil spilling into the Red Sea to that of the Exxon Valdez disaster. So we're, of course, getting updates on that as well. It's a story we're going to continue to monitor, specifically when it comes, of course, to the market reaction. Coming up on the program, though, space struggles. Boeing hits another setback with SpaceX taps to help bring NASA astronauts home. Plus, as Guy was earlier talking about, we're going to talk metals further. Gold hitting a fresh high. Iron ore looking for a rebound. Is it in on the risk rally that maybe we're seeing in other parts of the market? We're going to discuss. But up next, Powell signaling a potential global central bank policy alignment. The Fed, the ECB, maybe just on the same page. We're going to dive into that in just a few minutes. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. Stick with us. This is Bloomberg.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The cooling in labor market conditions is unmistakable. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
The much anticipated speech, Fed Chair Jay Powell speaking in Jackson Hole on Friday. Rate cuts are coming. The time is upon us. George Lagarias, Chief Economist at Forvis Mazars, joins us now to discuss. George, nice to speak with you. So we get a rate cut.
Nice to speak to you.
Powell has committed the Fed to a rate cut. Looks like it's September. Do you think it should be 25 or do you think it should be 50?
I think 25. I think 50 is too dangerous. I don't think the data support at 50. We don't see any sign of distress in the labor market. We see some indicators flashing red, and that's about it. So the straight answer is 25.
In the past, Powell has committed, it's felt like Powell has committed the Fed to rate cuts. I remember last December, he basically got the market very excited, and we saw expectations for rate cuts being priced in aggressively. This time round, are things different? Is he finally getting it right? Is he nailing this decision? Is it the right time to be cutting rates? Should the debate be between 0 and 25, not 25 and 50?
Absolutely, and I do think it's the right time to be having that discussion. Inflation is definitely far from its peak. There are impediments to declaring victory on inflation, to be sure, but Powell also needs to contend with slower growth. Okay, yes, I think there is zero danger of an actual recession, but growth is slowing, so he needs to deal with that too. He does have a growth mandate within his, unemployment mandate. So it is the right time to have a debate, but definitely there is no urgency to begin cutting very quickly.
George, I'm going to apply that same question, except not to the Fed, but to the ECB. Is this the right time to be cutting for the ECB as well? We had Philip Lane coming out over the weekend saying, well, actually, the job isn't done. We're looking at 2.6% inflation in the Eurozone. 2% is still a ways away. We're getting German and Spanish CPI later this week, which are really both sides of the dial when it comes to the inflation battle. Is the ECB ready to continue cutting?
The right time for the ECB to do more aggressive cuts was probably 6 months ago. Economic growth in the EU is not very good, but they couldn't do it. They had to wait for the Fed, or else they would risk capital flight. Money would leave lower yielding EU accounts and they would go to higher yielding US accounts. So right now, both the ECB, both Lagarde and Andrew Bailey must be uncorking the champagne, because finally they can start supporting growth in the regions.
How much of that is at the whim, though, of what you're seeing in the budget conversations this autumn?
Look, the budget in the EU is obviously an issue. But if I've learned anything over the years, is that Europeans are big on talking about, budget cuts and all that, and less eager to deliver them. France is not due to go back to the 3% at the current pace, at least not due to go back to a 3% budget deficit until 2027. Okay, and I think the time has come to admit it, that this 3% rule is not really working for the EU. So they're not going to do it, of course. But with growth next to zero, or 0.7, 0.8%, that's what's been predicted, I can't see how they're going to enforce big budget cuts.
And the Eurozone, we're getting inflation out this week. we're getting that inflation data out this week. It's expected to come in at 2.2%. What kind of print on Eurozone inflation would put that sort of cut in September into question in your mind? And what kind of print would the discussion around 50 start to begin?
Look, if I'm all honest, again, because that's my personal view, I don't think the European economy is data-driven, and especially not inflation-driven right now. The point is, I think they're more sensitive to growth, even though they will not admit it. And I think they were just really waiting for the Fed to get started. Okay, these were their two key inputs. And if anything, if I was Lagarde, I would not be looking at the headline inflation. What I would be looking at is services inflation, and not just the EU across the board. And I would be looking at Chinese PPIs, because that's the other big input. China has been lowering inflation in goods for the world for some time now. So that's what I would be looking at, not the headline number in the in euro area inflation. There are a lot of numbers around it: Chinese deflation, EU services inflation, and what the Fed is going to do. If I were Lagarde, that's where I would focus.
And if these cuts keep on coming from the ECB, which economies within Europe do you think are it's most bullish for? Who does it advantage most?
Well, the German economy, for once, they desperately, sorely need something to get them going. The French economy, I think all economies to be sure, but German and French economies have been under pressure. And the French have been borrowing a lot, unlike the Germans, to keep things on an even keel. So for the two biggest economies, it should start taking the pressure off. Again, having said that, transmission is not immediate, not even in the EU. So it could be a little bit less than a year before we start seeing those effects. You need to keep that in mind.
The very topic of the Jackson Hole Conference, of course, what that transmission mechanism looks like. Dirk Lagarias, we will leave it there. Chief Economist at Forvis Mazars, we thank you so much. Well, how does that all play into the gold outlook when you're talking about hedging those interest rate moves? So coming up, we're going to talk about just that. Gold holding a near record high. We'll discuss that and more with Macquarie's head of commodity strategy, Marcus Garvey, joins the program next. Not just about gold, it's about iron ore as well. 25.10 on the soft metal this morning. Let's see if it sticks. Stick with us. This is Bloomberg. 30 minutes away from the start of the opening trade across Europe, you are seeing futures do a whole lot of nothing. Look, it's a little quiet, a little bit less liquidity. It's a bank holiday here in the UK. So instead, we focus to the story of the precious metal gold, steadying near a record high after Fed Chair Jay Powell affirmed expectations that the central bank will start cutting interest rates next month. Let's just dive right into it here. Joining us now, Garvey, head of commodity strategy over at Macquarie. Marcus, a pleasure to have you on the program this morning. 25.13 on the precious metal this morning. What's driving the move here? Is this simply a function of pricing in some of the interest rate story, or is this central bank buying? Is this coming out of China? Walk us through the demand story for gold right now in your view.
Well, good morning. Thank you for having me. I think in the short term, it is exactly as you mentioned, it's that pricing in of, already underway in the case of the ECB, but more broadly at the beginning of the Fed easing cycle now coming into the market, and particularly in terms of the last sort of 2 weeks move, the weakening that we've seen in the US dollar, having given a gold a bit of a leg higher. But on an underlying basis, if we look at what's set the market up to be in this position, it is very much that central bank buying. It's also the fact that I would say, if you look at physical consumption, has been stronger than you would expect it to have been, given both the scale of the price change and the absolute price level, given they often move in inverse directions. And also, I think really crucially, two things on the investor side. One has been the addition of Chinese investor demand that we saw earlier this year. And then the other thing is that I would say, if you look at Western investors' willingness to tolerate higher real interest rates and still hold gold as a zero yield asset, has been a marked change over the course of the last 2 years. And in our view, the main driver behind that is the fiscal outlook that you see in most of the major developed market economies, which, given gold has sort of zero credit risk or zero counterparty risk, that adds to the attraction of gold as part of your portfolio.
But there's a concern right now that gold has rallied so far. It's at these record highs that perhaps as that hedge, that traditional hedge, you look elsewhere. You can even, I feel like, see it a little bit reflected in some of the ETF flows going into gold as well. But Marcus, I'm curious about the trade-off between gold, the likes of silver, the likes of other hedges, whether we talk about in the currency space or the bond space, and then also adding into the fact crypto, if for those perhaps retail investors that are more exposed to it. What does the trade-off look like between gold and all of those other assets?
That's a very fair question. I think, though, what you need to do if you're going to look at them, arguably, is look at them individually, because each of those assets offers a different thing in your portfolio. And if you compare gold to silver, they have a very high rolling correlation on a day-to-day basis. But if you look at their performance in level terms and the degree to which the gold-silver ratio can move, it's pretty dramatic. And I think a crucial thing there is that silver isn't purely a precious metal, it's a dual precious industrial metal. And actually, that relationship between the two often moves very closely with global growth. So if global growth is accelerating, silver outperforms on a relative basis. If you want something that's a hedge, gold generally does much better because of the way that ratio moves. If you compare gold versus something like the crypto space, of course there are similarities in terms of the idea of them, neither of them being fiat currencies, but things like, say, the gold Bitcoin correlation is very poor. If you look at their relative volatility, even as Bitcoin is nowhere near as volatile as it was sort of 2 or 3 years ago, they're still very, very different animals. So in terms of their impact on your portfolio, and I'd say particularly for institutional investors, really they need to be treated as different things which have different properties, because they don't have the same effect in terms of that traditional gold low vol defensive characteristic, and also crucially, I think that giving you the sort of alternative to a bond in terms of being truly risk-free on a counterparty or credit risk basis. That's the key distinction, I think, for gold at the moment.
Marcus, let's turn to the industrial metals. Good morning, it's Guy, by the way. Are the industrial metals telling us that there is a significant risk of a recession? How good a barometer are they right now?
I don't think they're telling us that, no. I do think they've been consistent in terms of the pullback that we've seen in prices with two key things. One, the fact that the Chinese economy has been relatively weak for much of this year, obviously coming off a relatively poor year last year. And two, that the anticipation of a re-acceleration in ex-China industrial production hasn't emerged. That we've not seen a meaningful pickup in things like the PMIs, on the manufacturing side at least, or in the hard data in terms of global industrial production over the course of this year. And they are consistent with that. I'd say in terms of the volatility of the prices we've seen in those markets, though, if you go back to sort of May, early June, when they're around their highs year to date, they weren't either telling us that at that point global growth was really accelerating very quickly, but that what they were seeing was a huge amount of speculative excess. And then the degree to which they pulled back to the lows that we saw sort of 3 or 4 weeks ago was arguably too much, as you saw the unwind of that investor positioning as well. So that the volatility in those markets has been a lot greater than the degree of change in the underlying economy over the course of this year.
So what is the real demand picture for, say, something like iron ore right now? There seems to be an awful lot of it at Chinese ports. There seems to be an awful lot of it in the Chinese system, steel in particular. What is that telling us in terms of the picture in China in relation to what we're seeing in the metals?
So I think for iron ore, you need to slightly split it out from the base metals because of the composition of its demand by industry sector, is different to something like copper. But even so, it does tell us some I think, fairly clear, some obvious, but some slightly more nuanced things. I mean, one, the weakness in the Chinese property market is very clear when we look at the ferrous complex, because if you get long steel production, which is the form of steel that goes into construction activity, it's very soft. It has been for the past 2 years. We've not seen any improvement this year. If anything, we've seen a modest further deterioration. What's really interesting at the margin in the steel market, though, is the thing that's supported iron ore throughout that period and not caused the kind of scale of sell-off that might have been anticipated, is that flat steel demand, which is going into manufactured goods, has been much more robust for the last 2 years. In the last month, however, we have seen that part of the market start to wobble. And that's both been in terms of domestic consumption in China, and also that China has been both exporting a lot of capital goods containing flat steel and has been exporting a lot of steel directly. And we've seen that slow down in the last month or so. And that arguably has been the thing at the margin that has led to cuts in Chinese steel production run rates and has taken away a bit of support for iron ore. I think in the very short term, though, one of the challenges, of course, from an investor's perspective, is that the steel market itself, less so the iron ore market, has seen very large short investor positioning into the recent lows. And we are, as I say, this week and really parts of last week at the back end, seeing some of that get unwound as arguably the steel market's done a little bit too much too soon.
I'd like to take you to the oil market, if we can, to get an idea of kind of what are the protagonists that are moving the price of oil. Because obviously we had these sort of large bombing sort of emissions in southern Lebanon. We only got a couple, 0.5% move on it. But oil's moved 5% in the last 3 days. So I'm trying to understand, if that is not going to move the market for oil, what is?
I think if you take a step back from, as you say, that immediate market reaction and just look at the underlying dynamics, almost everyone was expecting the market to be relatively tight in the third quarter of this year. Over the course of July, that really didn't materialize. The extent to which observable or reasonably estimated global crude stocks drew would have disappointed almost all analyst expectations. In August, though, as we've found a bit of support and seen this bounce in the last few days, we have seen the data starting to show more clearly that sort of physical front end of the market is a bit tighter, and we are drawing, as I think most people's paper balances would have anticipated. The problem from oil's perspective, as we look through the rest of the year, particularly on a total petroleum basis, not just a crude oil basis, is that we don't think the market is going to remain tight for very long. Demand has been disappointing, particularly actually from China, mentioning that, of course, earlier, and supply is actually still relatively healthy. There's clearly risks out there, but on an underlying basis, the market looks relatively well supplied, and you have a lot of spare capacity, even if you do get any shorter-term production disruptions because of events in the Middle East.
Yeah, and we spent a long time also, I spent in Germany, I'm usually based there, talking about the renewable sector, particularly EVs, and there was so much exuberance going into this market, a couple of years ago, whether it's lithium and cobalt, that has come radically down. What are your assumptions in terms of demand for those kinds of metals going forward over the next sort of 6 months to the next year?
I think if you look at lithium, obviously total global electric vehicle sales have disappointed many people's expectations, and I think crucially within that, if you're looking at lithium specifically, it's the pure battery electric vehicle cells. If you look at plug-in hybrids, they have actually performed as well as, if not better, than most people's expectations, but they have lower weighted average battery pack sizes, so you're shaving off a little bit of lithium demand there. If you look though at the next sort of 2 years, you're still seeing strong growth rates, even if they're below those that might have been anticipated sort of 6 months or a year ago, coming into, say, the high teens. but lithium remains oversupplied simply because of the scale of the supply growth that we have in that market. Means that it's very hard for it to get truly tight on an underlying basis until we see some supply get taken out. And so far, we've seen things like project deferrals. We've seen some future projects get cancelled. We haven't seen really currently under operation producers take anything meaningfully offline that would tighten up the market in the short term.
Marcus, I've been listening to you and I've been listening to this conversation, and I'm trying to understand kind of what is happening more broadly in the commodities market. My take from the conversation and what you've told me is that there is an awful lot of positioning right now. There is an awful lot of speculative activity in this space. And maybe that's having a greater than normal effect versus the fundamentals. Is that the correct assumption right now? I hear an awful lot of people trading the volatility in commodities. They're making good money doing it, and it seems to be working for them. Is that what is really driving commodities at the moment, more than normal relative to the fundamental picture?
I would say it's not taking us away from the fundamental picture, but what it has done is when you've had moves that have had a fundamental starting point and maybe then an extension of that, they're then getting exaggerated by some of the positioning. You know, that was really very clearly the case in something like the base metals back in May. You could say it was the case in the steel market in the last couple of weeks, just at least in terms of the short-term dynamics. But it's interesting, though, if you look at something like the precious metals, talking about gold at an all-time high, yes, there is a lot of positioning in that market, unsurprisingly, but it doesn't look excessively stretched. And we're not seeing, for example, things like systematic momentum length being really stand out there. So I don't think you can sort of, as a broad brush, say it's true all across the board and it's being drawn on an ongoing basis. But you can find, I think, very clear examples of where moves have been exaggerated because of that investor positioning getting really stretched at times.
Marcus, it's a great pleasure. Thanks as ever for catching us up on what's happening with the commodity story. Marcus Garvey, Head of Commodity Strategy, joining us from Macquarie. Let's talk a bit about what is happening out in space. I'm not sure I can make a pivot between commodities and the next story, but we're going to do it anyway.
There's a space rock thing in there somewhere.
Really?
I don't know.
Okay, that's a stretch, but okay. So basically, you've got a new CEO at Boeing, Kelly Ortberg, and you've got some big questions that he's got to answer over the future of the firm's Starliner program. Over the weekend, we saw NASA turning to SpaceX rather than Boeing to bring back astronauts that are stuck on the International Space Station. How big a blow is this? Is this potentially the kind of the catalyst that Ortberg needs maybe to make a decision as to whether or not that this program at Boeing has further life? Danny Lee joins us now, a transport reporter, to give us a take on this. Danny, how difficult a decision is it going to be for the new CEO at Boeing to keep this program going? This is a huge setback. How big a setback in reality is it?
Yeah, I mean, this is a long-running issue in Boeing's space unit, particularly around the Starliner, and a faulty craft which now Elon Musk and SpaceX are stepping in to bring home 2 astronauts from the International Space Station next year. And again, this is an issue around safety and one that NASA feels Elon Musk and SpaceX can cover for Boeing here. And it's one of the long-running issues here for Starliner, especially when, after doing an unmanned test flight in 2019, which didn't make the space station, and a list of charges that have now amounted to 1.6 billion onto the cost for Boeing, and it's had to absorb. And it's not necessarily in the best financial position these days when it comes to thinking about how it thinks about Starliner going forward, frankly. And so when you look at what NASA is doing to commit to this, to Starliner, and hopefully what Boeing does, NASA is clearly committed at the moment, but the question is whether Boeing really is.
In terms of what comes next, therefore, what are the metrics that Ortberg's going to use in terms of determining what he does next here? He's got a whole bunch of things he's got to figure out. As you and I know, we cover this story on a regular basis. We've got to figure out what's happening with the civil side. The military seems to be doing okay right now, but then you've got the space program as well. He's got a lot of things in his inbox now to figure out that he's got to fix. How is he going to make the relative... How important is space in terms of that sort of to-do list, do you think?
I think that is the billion-dollar question, frankly. When you look at the to-do list, trying to fix the commercial manufacturing side of the business when it comes to the jets and quality issues. And then when you've got tensions with unions as well, which could add up to a multi-million-dollar extra bill. And then you've got your stakeholders as well when it comes to fixing the tensions around stakeholders, customers, airline customers, specifically investors as well. And so there is a lot of issues there. And there's also that federal investigation that Boeing is currently navigating. So that dollar sum, frankly, can something like Starliner be a quick and cheap fix relative to potentially compromising the relative lack of cash that Boeing has these days? And I think for Kelly Ottberg, who has indicated indirectly that he's committed to Starliner in the near term, whether he really, once he's fully in control of all the issues, if he really is that committed.
Danny, great stuff. Thank you very much indeed. Danny Lee joining us on what is happening at Boeing, NASA, SpaceX.
I mean, it's a pretty remarkable story, obviously, in the context of Boeing. But can you imagine for these astronauts who were supposed to go home 2 months ago, are stuck there until February? I mean, Guy, you've been on some assignments in the field and expected to stay a little bit longer. This is slightly different.
Yeah. But I think the bigger one would be, am I getting home? How am I getting home?
And also,
now at least they have an answer to kind of how that is going to happen.
And also having to think about which is safer, right? Whether it's a Boeing craft or SpaceX, it's got to provoke some degree of anxiety.
What do? You're Boeing. You've got the other guy who does this better than you.
Yeah.
Do you continue with the program? It's a big cash burn. Danny was kind of running us through what was happening in terms of the kind of cash outlay that is going to be required here. This is a big decision. This is a company that's got a lot of things that it's got to fix right now. How big a priority is this program, and how much of cost would there be to cut it now?
But I also feel like, so that's the Boeing side of it. I think there's a government side as well, which is Boeing deals with a lot of these government contracts. So this relationship with NASA is, of course, long building. The fact they have to go to SpaceX now, which doesn't as much go on government contracts, it's largely a private investment funded by Elon Musk. I think there's criticism there. There's dangers there about what that looks like.
Well, increasingly, though, you could argue that Musk does have a lot of contracts. What is happening with SpaceX is one of them. Obviously, the satellite array program is another one. There are increasing numbers of projects in which he is involved with. And were Trump to win the presidency, you wonder whether or not those would only increase.
But that comes with the criticism, right? That is a concern for a lot of folks. We're going to keep monitoring that story, certainly as we get more from the astronauts, but more from what's going on with both of those space programs as well. Coming up on the program, we're going to take a little bit of a pivot here, potentially skincare scale on our minds. Unilever reporting exploring a potential deal for two of its beauty brands amid the company's broader shakeup. So one of your stocks to watch up next. I know, guys, thrilled about skincare.
Can't wait.
We're going to dive in.
Skincare.
This is Bloomberg.
Monday the 26th, we are post-Powell. What did we learn? Didn't really change anything. Let's try and figure out what these markets look like this Monday morning. Paul Dobson, Bloomberg's executive editor, joins us for Asia Markets, joins us now. What did we learn on Friday from Powell?
Oh, well, I mean, I think we learned the obvious, that the Fed is ready to pivot and is so ready to start cutting interest rates next month. I think probably the bigger takeaway in a way was that the Fed is quite worried, or at least paying quite a lot of attention now to the labour market. Powell speaking quite strongly on the fact that the Fed would not allow a further decline in the conditions in the labour market from here. So that makes that payrolls number that we're going to have in a few weeks' time all that much more important when people try to gauge whether the Fed will go 25 or 50 with the first cut. I think most of the expectation before Jackson Hole was probably coming back towards 25, and we saw a little bit more of the likelihood of a 50 basis point cut price back in, and so we have those lower yields. I think the other market takeaway is, well, hey, we're going to have lower interest rates, we're going to have a weaker dollar, we're going to be able to carry on pushing those equities higher, all other things being equal as a result.
Well, speaking of that weaker dollar, Paul, I'm looking at a 111 handle on euro dollar, almost 112. What cracks that winning streak?
Yeah, the euro is certainly performing strongly at the moment. We will get some inflation figures coming up this week should confirm that that's continuing to weaken as well. And September, doesn't look like a surefire cut for the ECB, although some of the policymakers around about Jackson Hole from the ECB were talking about there being like the little question to ask, off we go with another cut. There's still some caution among the Governing Council, particularly among the hawks, so it's not nailed on that that's going to happen. In the meantime, I guess you have to keep an eye on the euro area economy as well, which, although it is been showing a reasonable amount of resilience, so far people are a little bit concerned about as well. So those things, and then, on the flip side, how long can the dollar keep on weakening? I think if you believe that the Fed is starting on this cutting cycle, then that's going to continue to weigh.
And Paul, in the context of what you're saying, then, what do you think is more important this week, that European inflation data or the Nvidia earnings?
Yeah, I think I sound like a broken record because every 3 months I come on and do one of these hits. We talk about Nvidia earnings. I say, how can it possibly beat those lofty expectations? Pretty much every time it does match the lofty expectations or even exceed them. So I don't even know if you can call the expectations lofty anymore. We know that the AI story is great, that momentum continues, and that is going to inform at least that big kind of block within the S&P and US stocks and global stocks as well that is AI weighting now. And people will be paying quite a lot of attention to it to see how long that theme and that narrative can continue. But whether, Nvidia is the right one to carry on watching, given that it sort of has this almost monopolistic kind of hold over the market, or whether you want to think about what else is going to come up with it and whether they can be supported too, might be a question to ask when we get through those earnings reports later this week.
All right, Paul Dobson, Bloomberg's executive editor for Asia Markets. We thank you so much. Look, it's the opening trade next in Europe. Lots of stocks to watch. Unilever, Vivendi, Siemens Healthineers, all on the docket. Stick with us. This is Bloomberg.
Monday morning, good morning. Couple of minutes to go until the equity market open here in Europe. Remember, London is out for a holiday today. That's going to have a pretty big impact in terms of the volume story. This is the legacy from Friday. Europe got to price in Powell on Friday, so just bear that in mind. So you can see the jump, and we kind of went out in Europe, where the US went out as well. We got a little fade and then a bounce in the US session, which you can see in terms of the blue line there. I'm not sure there's that much guidance in terms of, therefore, what we saw Friday into today's session. We're pretty much even in terms of what we saw out of the US yesterday. And Ollie, I just remind everybody again, London is out. Volume will be light.
Yeah, that's right, guys. So we go to the STOXX 50 here to try to get some gauge on what we're going to get out of Europe this morning in the absence of the United Kingdom and the UK. Down by 1/3 of a percentage point today. As Guy was mentioning, we priced in some of that Powell on Friday late in the session here in Europe, pulling some of that back. We see it also in the CAC. More or less flat, though, in the S&P futures here. Basically flat, but again, trying a little bit in the red here on the heels of what we heard from Powell on Friday. And that, Guy, I'll hand it back to you.
I'll pick it up. It's a little bit of a nothing burger on the kind of index front, but it's also a little bit of action underneath the hood. You're getting reports from several of the papers around Europe. Unilever exploring a potential sale of its skincare brand. You've got investors talking about Vivendi's Telecom Italia stake as well. On top of that, Siemens Healthineers potentially buying Novartis's cancer scan chemical unit. There's a lot of M&A action. I'm curious how much of this is maybe spurred or at least even thought about potentially some interest rate cuts. That always tends to be a positive for M&A activity. But right now, none of these are confirmed. But of course, those reports, Guy, always enough to potentially move some stocks, even with some light liquidity, light volume.
I hope we're going to see some action at the single stock level, because I doubt we're going to see it at an index level. Anyway, it is time for the opening trade. Let's take a look at the opening numbers here in Europe. Remember, London is out. That's a chunk of change in terms of the volume story out of Europe. So just bear that in mind. I think you're going to see a fairly quietish open in terms of the trading this morning. You're seeing a very quietish open this morning. In fact, you're getting, according to my screen, no trade. Oh, there we go. Phew. Saved by the STOXX 600, which is up a staggering 0.02 of percentage point. So it's a busy start to this Monday morning, mid-August. I think we're going to see a quietish start to the week. We've digested Powell. We've got Nvidia to look forward to. We've got some data Friday. We've got London out. So we've taken that out of the board. But it doesn't look at an index level if we're seeing that much of an exciting session. So I hope I'm sure Ollie's going to tell me what the details are. We've got a great deal of rotation below the surface, and those single stocks, there's some cracking stories there as well.
Yeah, Guy, I'll see what I can do for you.
Sure.
I'm not sure I can provide you with the sort of level of excitement that you'd like this morning, but from what I'm seeing in terms of the GRR, the sort of market movers in terms of the different sectors on the STOXX 600 this morning, we have real estate up by about 1/3 of 1%, energy 0.2 of 1%, technology the big loser this morning, it seems, down by 0.5 of 1 percentage points. Insurance is the sort of second biggest loser there, basically more or less flat, but really it seems to be this morning the story is in real estate, which is catching a bit of a bid this morning, and technology, which is being sold off ever so slightly here, down 0.4 of 1 percentage point on the STOXX 600 group.
Yeah, well, let's look at who's actually behind that move. ASML is, of course, going to be your biggest index weight to the downside. SAP in the same vein. You're also seeing the likes of ASM as well, which is, of course, separate from ASML, and Siemens also taking a little bit of a hit as well. So there's plenty going on when it comes to, I think, the stock underperformance. Talking about the winners here, though, Guy, it's a little bit of the well, initially it was the oil outperformers. Now it looks like, well, still the oil outperformers. A lot of the French stocks doing well in the absence of some guidance coming out of the UK.
Yeah, I'm not sure there's a lot going on. There's something going on. There are things happening.
Is up 4/10
London is
1%.
closed. London is closed. It does take some of the heavyweights out of the market, but there are plenty of others. As you say, ASML and SAP. I think that's my only discernible kind of story here this morning, that we are seeing some technology weakness creeping into this market. It's going to be a big week in terms of that tech story. What are we going to see in terms of the read across from Nvidia? I think we'll wait until Wednesday evening before we get a clear guide on what is happening there.
Well, I also want to get a couple of checks on some of the stocks that we were talking about, the stocks to watch, because there is still some M&A talk at least. So even if these aren't confirmed reports, there is enough to move the markets here. Telecom Italia is actually open. Those shares higher by 1.4%. This has to do with that Vivendi stake as well. So the fact that you are seeing, again, light volume, light liquidity, etc., we're keeping an eye on it. Yes, go ahead.
The STOXX 600 is, you don't often see this, so this is kind of worth noting. The STOXX 600 is absolutely unchanged. I couldn't be less unchanged if it tried. Oh no, now we're down by 0.01 of a percentage point. But for a moment there, it was absolutely unchanged in terms of where we saw the story on Friday.
Well, we're going to keep an eye on it. We're still waiting for some of the markets to open. The Swiss market, for example, taking its own sweet time, frankly. We're always going to keep Novartis shares at top of mind. It's one of the stocks that was potentially going to be moving with some of that M&A news. But that is all that's going on the micro front. I want to bring it right back to the macro, because, of course, we heard from Jay Powell over at Jackson Hole. We also heard from I'm going to say this right, from plenty of ECB speakers as well. Take a listen to what they had to say.
Given the data that we have at the moment, I would be very much open for the discussion of yet another rate cut in September. But we'll see.
I think we have to look more carefully at the data. I hope we can do it. I'm not against cutting.
The most likely move in terms of monetary policy is to continue cutting rates. So the easing process.
Would you like to give us a date on that so we can make some news today? Our colleagues at the ECB are like...
September, it's easy.
Some commentary coming out of the ECB Governing Council members, Martin Kazak's there, Robert Holzman, and of course Mario Centeno speaking to Bloomberg at Jackson Hole. I want to bring in another voice here. Dirk Steffen joins us this morning, CIO for EMEA and Global Chief Investment Strategist over at Deutsche Private Bank. Dirk, a pleasure to have you on the program. Look, now that we're talking about this from a macro perspective, the ECB and the Fed seem to be on the same page. Are these rate cuts that are telegraphed on both sides of the Atlantic a tailwind for the stock market, or is this priced in?
Yeah, good morning. Love that discussion, by the way. You know, how long we can talk about 0% performance moves. So I doubt that these calm markets will stay like that. And much of that relates to what you just mentioned and asked about. So central bankers can give us some guidance, but not that much really, because we are still data dependent in our view. And I think that at least has been confirmed last weekend. So we are still in a situation now where inflation data will have to deliver. We are still in a debate about the state of the U.S. economy and, of course, also about the Eurozone. And if anything, we think that the market direction and also more so the macro direction would be more symmetrical from now on.
When it comes to, though, what is actually driving this market, and even though it does feel like from a monetary policy perspective, and arguably from a fiscal perspective as well, you see both sides of the Atlantic on the same page, it feels like inflation is still the story that is dominating the conversation in the States, whereas growth is more of the concern in Europe. And I'm curious how you price that in to a market that kind of seems to be doing the same thing at the whim of the U.S. rather than Europe.
Yeah, absolutely right. So if you look at the market pricing, we think that probably the market's take on the recent developments overall is a bit too dovish. So we would expect both central bank to be a touch more hawkish than what is currently priced in until Christmas. And it's puzzling to see at first sight that actually over the last 4, 5, 6 weeks, some more monetary policy easing has been priced in for the Fed and slightly less for the ECB. And the reason is clearly not growth. I mean, at some point it was when we had the raging US recession debate. But if you look at it, a bit more medium term, it looks like the economic strength is largely missing in Europe as well. So it is about prices. And it is probably still about wages, and it is about looking into 2025 when we get the next negotiations, especially in Germany, and we will have to discuss the still quite significant loss of purchasing power we still have.
Dirk, good morning. It's Guy. If the Fed cuts 25 basis points in September, do I buy stocks? If it cuts by 50 basis points, do I sell stocks?
That's a great question. So, normally you would say fear the cuts, right? Because if you look at the last decades, really, significant Fed cuts that went along with significant economic weakness. And that's clearly not a good sign for the market. So I would agree that if we only get 25 bips, that's probably market positive. And hopefully we can get this, when everything goes along, like a little bit better news on the macroeconomic front and a little bit less of a need for the Fed to cut 50 basis points.
Is the risk the bond market has done too much in terms of expectations? We've seen yields coming down really quite sharply across the board, particularly in the Treasury market. Has that gone too far?
I mean, we really liked the bull steepening, right? So first of all, we like the steepening, but also the bull steepening. We are all invested in bonds. And we think that this won't be the trade for the remainder of the year. So we think that there will be a little bit of renormalization, if you like, and slightly rising yields into year end and then also next year. But that should be, just a mild headwind. We still have very attractive coupons for the bond trade. And for stock markets, this should be manageable as long as it, as I said, goes along with a slightly better economic dynamics.
And we get sort of market pricing that's been jumping around on this sort of rate cut for the ECB in September, on September 12th. I mean, we woke up this morning, there was a 75% chance from the market that there's going to be a cut. Now we're at 98%. Do you think that September is a done deal? And do you think we could get anything in terms of data this week that could change the conversation around that?
I mean, we do think that, And I mean, central bankers will never tell us 100% what they will do. I mean, they can't commit that much. It will be data dependent, but it looks like the main central banks really sort of rhymed in for a September cut. So now it's much more about the size of the cut in the US, but I think communication is clearly going into that direction. We will have data, of course, over the next few weeks related to the job market, and this will probably now be the number one decision factor for the US.
And since you're sitting in Frankfurt, and I usually am in Berlin, and it's important for me to try to do this, and I have difficulty doing it. Is it possible to build a bull case for Germany right now, to invest in Germany, to sort of see the economy turning around anytime soon?
Well, of course. I mean, being based in Frankfurt, being German, I mean, Germany is simply not growing, right? So if we are talking about a potential, it looks like a global manufacturing recession. All the action is in services, and the German economy is tilted towards the other sector, right? So anything that is showing some improvement on the industrial side will be well received, of course. And then there's, I don't know if it's really a big problem, but if you look at the German consumer for now, it looks like many Germans are still saving for a rainy day. So it's, the money is, I guess, there, but it tends to go into savings. And now that we have significant wage hikes over the last couple of quarters, that might actually lead to some better sentiment also coming out of Germany. I mean, but as you said, I mean, we're talking about the bull case here. So let's see how this will work out.
A lot more positive than I expected out of you, Dirk. But I'm curious, though, when it comes to the negative, how do you position against it? We had a guest on earlier in this program that was talking about kind of the commodity space and gold really being more of a positioning story, driven, of course, by the fundamentals, but really more of a hedge. And I'm curious, what is your go-to hedge in a world where maybe commodities don't play that role anymore?
I mean, we really believe in, apart from the strategic asset allocation, which is arguably the most important one, we believe in tactical asset allocation as well. So it would be, in our view, also a lot about, varying the degree of equity exposure overall you have. And then it depends on the problem you expect that might be coming, right? So in summer, we had this potential weakness in the US economy, so you didn't really need the dollar. Obviously, right? So you lost on the dollar, so it wasn't a good hedge. But maybe looking forward, the dollar might find some more strength, especially when it comes to different type of risks. So we try to be active. We try to also use these more technical situations of sell-offs to rebalance the portfolio. So we try to close potential underweights in certain sectors and regions. And we also, as you know, we like to build a portfolio that is less dependent on just a bunch of stocks. So we like to add also on weaknesses some mid-cap and small-cap stocks, for instance.
Okay, Dirk, you're talking about significant stocks. Nvidia reports Wednesday after the close. Is the market ready for another bounce of volatility? We've come back really strongly after the bout of volatility we had at the beginning of August. Do you think we are done with volatility for now, or do you think actually the catalysts for volatility are growing?
We actually think that volatility will be elevated for quite some time. It's not only related to corporate earnings and the mega trends that, in our view, need to be confirmed in a kind of show me environment, right? So every earnings season, we will have probably the same thing that the companies, the most relevant ones, need to confirm what the market is expecting. So far, it looks good that this can be achieved, but this is also leading to volatility, not only on the single stock level, but also on the index level. And then we have politics, of course, so the US elections coming up. So we think that the current very, very low levels of volatility might actually need to be a touch higher, right? And is the market positioned for that? I mean, normally, the market is positioning for that, so there are tools to do that, but it really depends on the news flow. So the more negative it gets, so we will get more volatility and then also more negative trading days in frequency.
And Dirk, we talk about the data out this week. You've also mentioned the U.S. election. Something else that we're watching this week is the elections that are going on in Germany that begin at the statewide level. Do sort of the politics in Germany come into your thinking at all when you think about the future of the German economy?
Definitely, because maybe not so much the regional elections we're dealing with now. It's also important. But the bigger one will, of course, then be in the fall next year. And then Germany, I think, will have to make up its mind about how to position fiscally. Because if you look at the global fiscal picture, I mean, everybody is going one direction and Germany is going in the other. So maybe there's also room for some fiscal activity coming out of Germany. And that very much relates then to the elections next year.
Dirk, great to catch up. Thanks for the time this Monday morning. Really appreciate it. Setting us up for the week ahead. Dirk Steffen, CIO for EMEA and Global Chief Investment Strategist at Deutsche Private Bank. Thank you very much indeed. Let's take a look at the core six. Remember, the UK market is out today. What you've got is ASML looking like the only main loser. Looks like technology is where the pressure is being felt this Monday morning. Now down by 0.7%. I can't find a significant reason for this other than the fact that technology is under a little bit of pressure, a little bit of rotation in the market this morning. Does look as if luxury is having a slightly better day today, but it's a quiet Monday morning, I would argue, Chrissy.
quiet Monday morning, and here at least, I feel like there's some excitement happening in Italy. Maybe we should all take a little bit of a road trip there. Two stocks I've got my eye on when it comes to some of the news that's been making the rounds in the papers, and that's talking about a potential purchase of a Vivendi stake in Telecom Italia. You're actually seeing both stocks up at the moment, and this would really be looks like a little bit of a rotation in terms of just how much the government has a stake in Telecom Italia, in addition to some of the other players as well. So right now, well received by the market. Telecom Italia shares higher by 1.8%. Vivendi higher by 0.6% as well. So green on the screen in Italy.
Yeah, and green on the screen in Denmark as well. We see Zealand Pharma up about 1 and some percentage point this morning. And of course, this is a company that we probably didn't talk a huge amount about until a couple months ago in their role in the Mpox vaccination. And that, of course, has sent the shares rallying substantially this year. They're up about 130%, catching a bit more of a bid again this morning. But again, pretty small, just given the sort of trajectory we've seen for this stock over the last year, which, as I've mentioned, has more than doubled since January.
Critty wants to go to Italy. I'm going to take you to France.
Okay.
I think you're okay with that.
Yeah.
Okay, let's take a quick look at what's happening at the CAC Carol this morning. There's a reasonable amount of strength. Volumes are low, but there's a reasonable amount of strength out of the French market this morning. Some of the drug stocks are ticking a little higher this morning. Luxury looks like it's having a slightly better day as well. Hard to draw significant conclusions from this in terms of the rotation we're seeing. Feels like, again, a week that's going to get off out of the blocks fairly slowly and then pick up the pace as we work our way into Wednesday and then into some of the data later on this week. We're going to talk about some of the other stories next that are moving around the world this morning. And again, maybe a centre on France. Telegram questioning the detention of its CEO, Pavel Durov, in France. We're going to have the latest on that story. We'll figure out what is happening here and what the implications are. We'll do that next. This is Bloomberg. Monday the 26th, good morning. Exciting morning in Europe. There's a lot going on out there. I joke, it's a quiet session. London's out. You're seeing light volumes elsewhere. There's plenty of other stories that we need to be focusing on other than what's happening in markets. Let's talk about what is happening in social media. Telegram questioning the grounds for France's detention of its CEO, Pavel Durov. The messaging app's billionaire co-founder taken into custody at Le Bourget over the weekend. Let's talk about why and how long potentially he could be held for. We go to Paris now. Our bureau chief, Alan Katz, is standing by. Alan, why was he arrested? Walk us through the details of why the French authorities have made this move.
So they haven't said anything officially yet, but on background, what authorities have alleged is that he is involved in all sorts of things, from cyberbullying to drug trafficking to potentially even worse matters. But the point is not that he did them himself, but that it's essentially a lack of content moderation on Telegram that allows these things to happen. And so your second sort of part of your question about how long he'll be held, part of that depends on sort of what the charges really are. Now, the prosecutors are supposed to come out with a statement today about what they're really actually going to charge him with if they charge him. But normally a detention in France can be 24 hours from the initial arrest. Then it can be extended for another 24 hours. And then at that point, which would be roughly 8 p.m. tonight, Paris time, he would have to either be charged or released. That said, if they do end up charging him with a very serious crime, saying that essentially he personally is responsible for, drug trafficking, because of his of things happening on Telegram, then that could actually be extended even further. Though, again, I mean, who knows? But it strikes me as hard to sort of make that claim that he personally is responsible for it.
And how significant is it that he was actually picked up and detained in France, and that is France that's bringing it to him? And what comes next for him?
So it's quite unusual. There have been some countries that have started to make moves to try to put pressure on social media companies to do more in terms of content moderation and to rein things in. It was still, nevertheless, quite surprising that he was arrested over the weekend in France as soon as his plane landed at Le Bourget, as you mentioned earlier. And the question in terms of what's next really depends on whether France charges him and whether or not, having charged him, they decide that he's a flight risk and therefore keep him in jail. Again, like in many countries, the wealthier you are, the more access you have to means to leave the country, for example, a private plane, then you have this mix where you have capable attorneys who can argue that you should be released because you're not a danger to society. On the other hand, prosecutors who say you are a flight risk and therefore we should keep you in jail. We need to, in addition to taking your passport, we need to actually keep you behind bars. So it's not clear yet whether or not he would stay in jail, even if charged, whether or not he might be released but have to turn in his passport if charged. We will likely see by tonight, though, again, as I mentioned earlier, it's possible that it could be extended even more.
So, Alan, this is a very specific issue when it comes to Telegram and, of course, to its founder. But what are they doing in terms of kind of the broader relationship between France and Russia, given that he actually left Russia, fled Russia, now currently lives in Dubai because he was concerned about some of the pushback on a previous social media platform that he had made in Russia. And now it looks like you are still seeing the diplomatic authorities out of Russia almost be very tough on, trying to figure out the wording here, very tough on France right now in response. What's at stake from a country, from a diplomacy point of view?
So that was a pretty surprising response, actually, from the Russian embassy, essentially sort of saying like, oh, he's a Russian citizen, therefore it's up to us to defend him. We don't know the status of his Russian citizenship. There's no indication that he ever renounced it. He does also have French citizenship, actually, which he got in 2021. And so... but it's true, as you say, like he left Russia because he felt under duress there. And so it seems very surprising that the Russian embassy or that the Russian government would suddenly say like, oh, he's our citizen and we need to protect him. Now, that said, Russia and France aren't friends. Macron and Putin, the very beginning of the Ukraine war, Macron tried to sort of straddle this line, saying we shouldn't embarrass Putin. But he's since become quite a hawk and quite an anti-Putin personality on the global stage. And so I think this is more Russia's effort to find something to yell at France about, rather than any sort of legitimate concern about the Telegram CEO.
We are going to keep an eye on that. Bloomberg's Paris Bureau Chief, Alan Katz, we thank you so much for bringing us the latest on this story. Folks, I thought this was fascinating because I actually got to look up kind of the size and scope of what Telegram actually is, not being a user myself. 900 million users around the world. But to qualify for the EU scrutiny, 45 million active users in the EU is what you need. So this is fascinating in terms of, again, the global scale of this company.
It's really fascinating on a number of different levels. I mean, I look on the phone today, the Telegram app is still functioning. They've detained the CEO. There's also a question about what kind of precedent does this set? You can detain a CEO after this stuff happens on the platform. Is it so different from WhatsApp, from Signal?
I was about to say, if you're the CEO of one of these other social media messaging apps, are you worried at this point?
Yeah.
Is this different because of the way that it is used, because of maybe less content moderation? Is this a signal to others maybe to up that content moderation? Are they sending a message with this, ironically?
I mean, this is what Elon Musk's concern is, right? So we're going to keep you apprised of that story. Coming up on the program, we're getting an update on the situation in the Middle East after Israel takes aim at southern Lebanon. We'll dive into the details next. This is Bloomberg. This is the opening trade. We're about 30 minutes into today's session. You are seeing a little bit of red on the screen, but again, very light volume, very light liquidity. We'll, of course, see how the rest of the week shakes out. This might simply just be taking a little bit of cash off the table. However, you are seeing outperformance in France. You're also seeing, I'm not even going to call it outperformance, Zurich, the Swiss index, it is flat right now. But you are seeing outperformance in France. Some of their biggest movers are those heavyweights out of there. So that's your markets update. Let's go back to one of the top stories that we're keeping an eye on. A relative calm is holding in the Middle East after Israel's Sunday bombing raids on southern Lebanon. Israel says it took out thousands of Hezbollah missile launchers based on intelligence that the Lebanon-based militant group planned imminent attacks.
We follow Hezbollah for weeks with technological means and air patrols by Air Force planes. At the moment, we detected an intention on the part of Hezbollah to carry out the attack, and we eliminated most of them.
If the result is not sufficient in our opinion, we will reserve the right to respond at another time. Let the people relax. Whoever wants to go back home can go back home. The country must calm down again.
Let's get more on the story. Bloomberg's Jumana Bersetchi covering this for us out of Dubai. Jumana, give us the latest in terms of where the flare-up leaves us in terms of some of these tensions and possible full-on war.
Well, Kriti, we're more than 24 hours since those strikes and counterstrikes took place, and many analysts are calling this an escalatory de-escalation, in the sense that it's been more than a month now that the region has been on tenterhooks, anticipating some form of a retaliation or a response out of Hezbollah and its proxies in the region, even from Iran themselves, in retaliation to the killing of its senior commander, Fa'ad Shukr, at the end of July. And indeed, over the course of the last couple of weeks, Hezbollah had hinted that this retaliation was forthcoming. Well, it did happen early in the morning on Sunday. And in the end, Hezbollah acted alone. They fired more than 300 rockets towards northern Israel, some even directed towards central Israel, causing very limited military infrastructure losses. There was indeed the loss of one Navy soldier's life. But crucially here is that Israel also engaged in a preemptive strike on Hezbollah's assets about half an hour before the attack took place, taking down what they say is the equivalent of thousands of rockets that Hezbollah would have launched towards Israel, foiling the possibility of a bigger attack. And so this counterstrike has taken place. And what's key here is both sides are saying that this was a victory. Israel is saying that they helped thwart a bigger attack. And then you heard from the Secretary General of Hezbollah, Hassan Nasrallah, towards the evening yesterday. He was saying that this first phase of response was a success. And for the time being, they're going to reassess whether a second phase is needed, hence indicating that the first phase of retaliation is indeed over for now. And what I would just point out is even though Israel declared a state of emergency early on Sunday morning, the Tel Aviv Stock Exchange actually closed up on the day, which signals that many in the region do think that the worst is over or has been avoided for now.
Yeah, Jumana, what's very interesting is it seems very difficult to distinguish between whether we are closer to war or closer to a ceasefire. We have this conversation kind of in either direction. Last week it was looking like a ceasefire. Those discussions are underway. How did the events of this weekend impact those talks?
Yeah, you know, one thing that I thought was really interesting is several hours after the attack took place, an Israeli delegation actually headed to Cairo to continue those discussions with the CIA director, with the head of Egypt's intelligence as well, with the view of continuing along with the negotiations of that ceasefire deal. And we know that the U.S. have been pushing very actively all throughout the course of last week. You even heard Kamala Harris talk about it at the DNC. It is a focus of the Biden administration now to get this ceasefire deal across the line. Very significant that Israel did decide to still attend those discussions in Cairo on Sunday. That being said, it still feels as though there's a lot of daylight, and even Hamas themselves were not officially represented in the talks. There was a delegation there, and they were briefed on the discussions that took place between Qatar, Egypt, and Israel, and the U.S., of course, but they weren't there representing themselves at the table. One of the key sticking points that has emerged in the last week is that Israel wants to continue to have a presence along this so-called Philadelphia corridor, that is the border separating Egypt from Gaza. For Egypt, for Hamas, that's a non-starter. And so the question is how much wiggle room the two sides really have here to come to an acceptable compromise that would lead to a truce, that would lead to some sort of ceasefire, and very importantly for Netanyahu and his base back home to secure the release of hostages. So negotiations are still underway, but no major signal as of yet that a breakthrough is imminent.
Jumana, how does this impact what Iran does next?
That is the question. And remember, the twin assassinations happened on the same evening. You had the assassination of the senior commander in Lebanon, the Hezbollah senior commander Fa'ad Shukr, and a couple of hours later, you had the targeted killing of Ismail Haniyeh, the then political leader of Hamas, who was in Tehran for the inauguration of Pezeshkian. That all happened in the same evening. And ever since then, both Iran and Hezbollah have been putting out comments after comment saying that they will retaliate and will not let these killings go unnoticed or not accounted for. And what is interesting is they've had a month to get their act together, and in the end, Hezbollah decided to act independently. We have not had an official response from Iran. And indeed, yesterday was the 40-day commemoration of Ashura. There were commemorations going on in the street, but not a lot of talk about the attack that took place between Hezbollah and Israel over the weekend. And so the feeling over here in the region is that Iran at this point is not looking for further escalation. They will have to do something to save face, to show that they've retaliated somehow for the embarrassing killing of Ismail Haniyeh on their own land. But at the same time, they're not in a position right now to push this into an all-out war. And certainly you could say that the deterrence and the fact that there is such a strong U.S. military presence right now in the region could be one catalyst for Iran not wanting to prod this any further. Furthermore, they're also waiting for the results of these ceasefire discussions, because if that truce does come into action, then it would signal that a whole lot of the temperature and pressure in the region can come down for a couple of months and allow things to get reassessed.
Jemana, thanks for the update. Always appreciate it. Thanks very much indeed for joining us. Jemana Basetchi out of Dubai for us on what is happening in the Middle East. Let's talk about the market impact of all of this and what it's doing in particular to the oil and gas markets. Let's bring in Bloomberg's senior energy reporter, Steffen Stapczynski. I always get this wrong.
You got it.
No, I didn't get it. Eventually
anyway, you did.
I got there eventually. Steffen, I apologise. I always get it wrong. I don't know why. We're going to fix it one day. Anyway, let's talk about the oil market impact here and talk about what is happening with the read across, because I'm struggling to see one. It seems as if the market has decided that we are at some point going to see something that is going to be market moving, but it just isn't yet. I see a little tick higher in the oil price. Why is the market feeling so comfortable with what is happening in the Middle East right now?
You know, they've come and seen this several times before, you know, since the conflict between Israel and Hamas escalated more than a half year ago. You know, there's been this session where there's been an attack, there's been conflict. It brought in Iran. It was unprecedented, certain things. And oil prices would rise, but they would fall again because oil output, the fundamentals, oil output trade is not affected. The fear, of course, and the reason why oil prices react to this is that you could bring in a wider, broader conflict in the Middle East, which is a major supplier of crude oil. Any more sanctions against Iran would potentially curb exports from that country, a major exporter, despite the curbs and restrictions already on the country. So that's the fear, but none of that has really panned out. And as we've just heard, you know, the situation does seem a bit calmer at the moment. So yeah, oil's up a tick, less than 1%. But at the same time, there isn't this immediate fear that this is going to spiral out of control, which is why you're not seeing an enormous reaction for Brent. And we're still in the around $80, which is, you know, not terribly high considering where we were, you know, a year ago around this time.
Yeah, and $80 is perhaps a number that a number of people are not too happy with, namely OPEC, which seems sort of quiet during this sort of debate about what's going on. They've got their internal sort of fracturing that's going on in terms of the different delegates wanting different things. Where does OPEC play in here? And are they going to be a sort of serious driver for the oil price in the coming months?
I think that OPEC Plus is what the market is watching very closely. Now, from the fourth quarter, they're supposed to add barrels back to the market. This was part of a plan that was announced months ago because the market didn't look necessarily as much oversupplied as it does right now. But now their analysts are saying that if OPEC Plus does carry through with their plan to boost production about 500,000 barrels per day later this year, that would be actually a bearish surprise. Now, just to repeat, analysts are saying that what OPEC says they're going to do, if they follow through with their plan, that would add a bearish element to the market because that would just add more to the oversupply. It would add more water to the fire that doesn't exist. Now, that means that perhaps you'll see OPEC Plus scale that back. Saudi Arabia has, you know, there has long been said that they need a higher oil price to balance their budget. Now, officially, they don't necessarily go by that line, but of course, Brent above $80 is much better than Brent in $70 or even below $70. So there is an expectation that perhaps OPEC Plus will not carry through with the plan later this year to increase output.
So, Steffen, it feels like, I mean, you talked a little bit about the Iranian supply situation, the OPEC situation as well. I'm curious about the ongoing situation in the Red Sea, specifically when we have an oil tanker that's still on fire there at the moment, people comparing it to the Exxon Valdez crisis as well. But it's not something that the market is responding to with as much sensitivity as maybe it did when these Red Sea attacks first began. And I'm curious why, given that they're still ongoing.
I mean, I think there are a few reasons for that. I think one, it's actually largely priced in, right? The oil market, and a number of markets beyond just oil, natural gas as well, has sort of shifted global trade around, the Cape of Good Hope, maybe going through different channels to get their shipments delivered. We're even seeing maybe more oil shipments going through the Northern Sea route from Russia. Now, all of that together shows that the market has sort of been able to take in and digest the disruption in the Suez and the Red Sea. Now, so I think to a degree you are seeing a reaction, but you're not seeing, and I think oil traders largely see the Suez and Red Sea off the table as a transit route for the foreseeable future. When I talk to shipping executives, they aren't expecting this to get resolved anytime soon. So that kind of plays into the priced-in scenario. So when you do see, an attack like we did before, yes, you would have seen spikes in oil prices. But now I think the market has adapted and sort of digested that. If you go through there, it's going to be dangerous. That is something that could happen. But it doesn't change the risk profile or what insurers are saying. People who want to stay out of that region are going to stay out, for sure.
Yeah, and it's something that you've certainly seen, to your point, to the shippers, but also simply the fact that the U.S. military has, of course, significantly reduced their presence, whereas initially they came to the rescue there. Bloomberg senior energy reporter will leave the conversation there. Steven Sepchinsky joining us this morning. We thank you so much. Coming up, we go to another top story that we're monitoring across the English channel. France's Emmanuel Macron set to meet his political rivals as he tries to form a government after the grace period of the Olympics. We're going to dive into the details. Stick with us. This is Bloomberg.
Happy Monday. Welcome to the program. Volumes are a little light this morning. Equity markets aren't really doing very much. I think we're going to have to wait until London returns tomorrow before we see equity volumes returning. We're going to build up this week through Nvidia into the end of the week in the data. I think that probably is going to be the trajectory we're on. Elsewhere, there are actually some pretty interesting things happening. French politics is one area I think we should probably focus on this morning. The French President Emmanuel Macron meeting again today with political parties, delegations, trying to form a government, trying to figure out a name for the next Prime Minister. Remember, we had snap elections back in July. Basically, we've got a hostile National Assembly when it comes to Macron. He's got no majority. He's got to figure out what he's going to do next. So we saw some meetings Friday. Those are going to carry on today. Caroline Conan is back. Let's talk to her about what we're seeing here at the moment. Caroline, let's talk about what we're going to see today and what we saw Friday. It looked to me as if Lucie Castet, probably from the left, her name is out of the frame when it comes to being the next Prime Minister. Are we going to see any more progress today? What is the latest update?
We're exactly 50 days since the results of these snap elections actually delivered a hung parliament with no one having a majority in the French parliament. And today, Emmanuel Macron is continuing the discussions first with the president of the National Assembly this morning, this afternoon, the president of the Senate, and right in the middle, late morning, the most important meeting, of course, with the national rally leaders, Marine Le Pen and Jordan Bardella. Now, remember, last month, they were supposed to come first in those snap elections, something that actually scared the markets for several weeks, but they ended up with the third bloc, 143 seats. So still a big bloc, but still very far from a majority. And Macron has already promised he will not name a prime minister from either the far right or the far left. that's where it gets very tricky because, as you know, the new Popular Front, this alliance of left-wing, actually got the biggest bloc in parliament with 180 seats. They did these meetings as well with Emmanuel Macron on Friday, and their chosen candidate for Prime Minister, Lucie Castet, 37-year-old economic advisor to the Paris mayor, has been everywhere in the French media over the summer, even though she doesn't really have the legitimacy given she is not an MP, but she's backed by all the parties, including the far left. Now, that's where it gets even trickier because Emmanuel Macron has said, I don't want to name anyone where you have the risk of having a far left minister within the government because they're going to face a vote of no confidence. But on Saturday, Jean-Luc Mélenchon, the far left leader, said he would actually support Lucie Castet as prime minister, even if there is no far left minister in the government. So basically, Emmanuel Macron is caught in his own trap because he didn't put the program of the NFP at the center of the debate, but rather the presence of some far left ministers. So technically, he doesn't have much choice at the moment if he wants to respect the will of the vote of the French last month.
Well, Caroline, walk us through the timeline here then, because it feels like, of course, we had this grace period with the Olympics, this idea that we need to kind of focus on that first. Now, what are the deadlines? Is there even one, or is there a ticking clock in terms of making this decision?
Yes, Emmanuel Macron had talked about an Olympic truce, but the Olympics finished a couple of weeks ago. The Paralympics start on Wednesday night, so he's got a very small window of a couple of days to potentially name a new prime minister, because on Thursday morning he's actually traveling to Serbia for an official trip. So either he names a new prime minister over the next couple of days, or perhaps he waits until after the Paralympics on September 8th. But a lot of the political leaders are pressing him to act quickly and to deliver a new prime minister quickly, because there is one deadline, which is October 1st, where France has to present a new budget. So technically, they need a few weeks in order to prepare that new budget, especially when you are in a situation when France has been placed under an excessive deficit procedure by the EU Commission and needs to give some answers on the budget to the EU Commission by the end of the month. Of course, the last thing that Emmanuel Macron wants is to name someone who then immediately faces a vote of no confidence and then create potentially even more political chaos.
All right, Bloomberg's Caroline Conan there walking us through the French dynamics that we are seeing and of course, the timeline of when we can expect that decision from Emmanuel Macron. We thank you so much. Let's go to the other part of the world that we have our eye on. Of course, all focused on Germany, specifically because at 9 o'clock, in about 9 minutes' time, we get some EFO data as well. Oliver Crook standing by with a little bit of what we need to be watching in terms of the background of some of that economic data. Ollie.
Yeah, Kriti, it feels like a waste to not use this magnificent screen you guys have here on the London set to talk a little bit about the German August ANKS, which is all the data that we got out in the month of August that we care about. Industrial production, this is backward facing. This was June, but this was down 4%, right? That is a substantial sort of tick down in industrial production, which of course is very significant for the German economy, which has that huge industrial base. ZEW, the current assessment, that was at minus 77. That is basically at pandemic levels in terms of economic optimism, which is obviously very, very poor. And you kind of hope that you've gotten away from that as the time has gone on. But again, it is not. In manufacturing PMI, again, a miss coming in at 42. Again, this was supposed to come in at 43, so missed estimates. And this is a very large contraction down at 42. And it's 26 months of contraction. In terms of looking ahead, as you mentioned, we have EFO data coming a little bit later in about 8 minutes' time. So we'll be watching that closely. That is expected to tick down. GDP, you get a final reading. That was a quarter of contraction. Could it be worse? Could it be better? And then, of course, we have to pay attention to the inflation reading out of Germany. That is expected to come down to 2.2%. That is within sort of the ECB's range of inflation target. So that is sort of significant. What is perhaps more significant is what happens between these 2 days here, which is Nagel speaks for the first time, and we hear from Schnabel on Friday morning, plus German unemployment up at 6%. That is the highest level we've gotten, again, since the pandemic. So all of these things to watch in the German economy.
Does Germany need rate cuts, I guess is the question.
Yeah.
And it's interesting that Ollie highlights who we're going to be hearing from in terms of the ECB. In some ways, Germany has the greatest angst when it comes to inflation, and therefore the hawks tend to come from this region.
Yeah.
But it feels like this is an economy that needs the rate cuts the most. So there's an interesting kind of push-pull here in terms of what is happening with the German economy. And how is the price of money a problem for Germany at the moment? Or is it other factors like the cost of energy, which central bankers are going to struggle to manage? Is it what is happening in China, which central bankers are going to struggle to manage? How much of this is within the control of the central bank?
Yeah, when you look at the macro and the kind of things that could derail these sorts of things, and we talk about the Chinese tariffs on EVs and the price war. I mean, now it's on cheese. Who knows what's coming next, right? But seriously, it's the German economy that is the most exposed to these sort of things. And it's obviously, one, inflationary, and two, not good for growth.
Well, that's the manufacturing piece of the equation, to your point, the export piece. But I'm curious as well, and I know this is a smaller part of the German economy, but how this affects German consumers specifically. If we're talking about that Germany needs these rate cuts the most, we're just coming off of a conference where we're talking about the transmission mechanism here. How does that show up to German residents, German citizens? That's
don't look at me, look at him.
No,
look
but
at
actually,
him.
no.
Historically overbanked.
Not only is it a valid question, you get private consumption data out tomorrow, Critty, so we can talk about that when it crosses across the terminal tomorrow morning. So you'll get actually a gauge in that. But there's also a cultural dimension to this, which there always is with the Germans and a lot of these economies. They're very risk averse. They really are. When things are just not feeling great, people are not spending money.
They save. But they also, I was reading some reports on consumer confidence in Germany. It's not actually that bad, which I find peculiar given what is happening with the economy. We all talk about Germany being the sick man of Europe again. But if you look at the confidence data, it's not there.
But isn't that a function, though, of the banking system in Germany, that you have super low rates in Germany in just over competition, everyone kind of vying for the same customer, more so than any other European economy?
Yeah, you've always had the sort of the Sparkassen and the kind of the funding of the Mittelstand, and there's always been that kind of symbiotic relationship. That doesn't feel as strong as it once was, but nevertheless, does Germany have a cost of money problem? It doesn't feel like it. And so if you do see the ECB cutting, how quickly are you going to see that effect coming through?
Yeah, and you talk to the sort of banks like Deutsche Bank, who obviously we grill every quarter to get an idea, because they're the ones that are lending directly to a lot of these Mittelstand companies, to a lot of these consumer companies, and things they say are beginning to pick up a little bit. But again, they're very non-committal about kind of how big that's moving, and I don't think that it's going to be sort of decisive over the next coming months. But let's see, with these rates coming down, maybe it does make a difference.
That data is going to drop very, very shortly. I have the pleasure of doing the Pulse today, so I am going to be speaking to the president of the IFO Institute. Clement Fust is going to be joining us shortly. The reading drops. We'll get the interview. I think we're going to get to him about sort of 2 or 3 minutes past the hour. So we'll get an update on exactly what is happening here and maybe try and answer some of the questions that we're posing.
Well, I think the last time this data set dropped out, I think I was the one who interviewed him. And I thought what was actually interesting is he had made the point that geopolitics actually plays a factor in this data set. It was something I hadn't actually heard from an economic standpoint yet. We talk a lot about in terms of the narrative, in terms of the politics, et cetera. But I'm curious how much of that plays a role this time around.
It's going to be fascinating to hear. Also, you've got this rearmament story, which I think is going to be an interesting kind of factor in what we're seeing in terms of German industry. We've got a whole bunch of other interviews coming up as well. We've also got an interview with San Francisco Fed President Mary Daly. That's at 7 p.m. UK time tonight. Looking forward to that conversation. What does she make of what happened at Jackson Hole? What was the takeaway from all of that? It's a quiet day from an equity market point of view, but we're about to get some key data. The IFO numbers are about to drop. We'll bring you that next in the Pulse. This is Bloomberg.